Have you ever lost money on what looked like a perfect breakout, only to watch it reverse against you? Well, in this video, I will show you guys breakout trading strategies to help you identify real breakouts, but even more importantly, also help you avoid the false ones. So make sure, guys, to really pay attention, and without further ado, let's get started right away here. But alright, so before we jump into the charts, we of course first need to know exactly what a breakout is, and we also need to know what a fake out is. But let's begin here with the breakout. So what is a breakout? Well, in very simple terms, a breakout is when the price moves outside a defined support or resistance level with increased momentum. This is a very important factor, and we will talk about that a lot in this video. The momentum is key, and it's also important that we do have a real support and resistance. And here, breakouts can signal both signal strong new trends, and they can be found in any market. So it doesn't matter if you trade stocks, cryptocurrency, or forex. So breakouts are very important if you want to catch trends early, but they can also be powerful. They can also be very powerful for short in and out trades. That is actually one factor that I think, or a reason why I think breakout trades are so popular, especially amongst beginner traders, because they are fun. You can get in and out quickly and earn lots of money. However, and this is very important, now let's take a look at what is a fake out, because this is one of the most common traps for beginner traders. And a fake out is basically, it looks like a breakout, but it quickly reverses back into the range, failing to sustain the initial move. And what a fake out does is that it traps traders. It traps traders who enters early, and one of the common reasons here is something called FOMO, which can lead to very significant losses as the price reverses. So fake outs can also be found in any markets, but they tend to be more common in low volume environments and when there is no strong reason behind the breakout, or even during market manipulation to trigger stop losses. And here, this is actually a very common trading strategy. It's a trading strategy called liquidity grabs. So if you have the time and want to learn more about liquidity grabs, I do have a video about that, and I'll make sure to link the video both in the video card as well as the description. But alright guys, so we are soon ready to jump into the charts, but before we do this, I just want to show you guys a simple breakout trading strategy. And this breakout trading strategy has a few steps, and the first step here is to use chart patterns. So we can look out for patterns like triangles, ranges, flags, and so on and so on. And these are common setups that happens basically before a breakout. So these patterns basically give structure and help anticipate the breakout points. And they basically represent a consolidation before a potential expansion, before the potential breakout. And once again, guys, for chart patterns, I do have a full 1 hour long trading course that I highly recommend to watch. So if you have the time after this video, I highly recommend to check that course out in your own pace. But right, so the next step here, step 2, is to watch the volume. In my opinion, the volume is key to, a key separator between real breakouts and false breakouts. And we will take a close look at that soon. But here, a real breakout usually has a surge in volume. So an increase in volume. You can think about it as the relative volume, right? So we want an increase in volume. And this increase in volume basically confirms conviction behind the move. If we have low volume, it's usually a sign to be careful. And here, step 3 is actually optional. This is when you wait for a retest. So if this right here, let's say we have like an ascending triangle, and let's say the price breaks out right here, some traders will wait for the price to retest the previous resistance to flip to become support and try to buy that point. But this is optional. So some traders focus on the retest, some traders focus on actually buying the breakout, and there's no wrong strategy here. Both can work if you trade them correctly. But here, last but definitely not least, we want to analyze the actual breakout candle. So a strong breakout candle closes far beyond the level. So we have a strong candle close above the level, and a decisive close basically indicates market acceptance. If we find long wicks or weak candle closes, it's also a sign of a fake out. But alright, so now let's jump into TradingView and take a look at some examples of good breakouts, but also some examples of fake outs. And by the way, guys, if you for some reason haven't gotten started with TradingView yet, I do highly, if you have been watching my videos, you know that I highly recommend this platform. And luckily, I do have a special TradingView link. You can use that link to try out TradingView Premium for free for 30 days. And if you later on decide that you want to upgrade your TradingView plan, you will get a $15 bonus. So if you want to get the most out of TradingView, definitely use that link. But now let's take a look at two examples of breakouts. And the first pattern I want to take a look at is right here. By the way, we are currently looking at Bitcoin here on the 4-hour time frame, but you can trade breakouts on the daily time frame. You can day trade breakouts on the 5-minute time frame. It doesn't really matter. But first of all, with this particular breakout, I first want you to notice that we did saw a chart pattern. We had an impulsive move, then the price started to consolidate here. You can see we printed consecutive lower highs, while at the same time we printed higher lows. So this right here is what we call basically a symmetrical triangle pattern. And then, as you can see right here, we saw a beautiful breakout. And there are a few factors that made this breakout so nice. The first factor is that this actual breakout candle is what I call a momentum candle. A momentum candle for me is when the candle is at least twice the size, preferably 3 times as large as the previous candle. And you can clearly see that the breakout candle was, maybe 3 times or even 4 times as large as the previous candles. So that's the first thing I'm looking out for. Another thing I'm looking out for is the volume. And as you can see, if we follow the candle down to the volume, you can see that the volume bar of the breakout was much taller compared to all of these previous volume bars. So the important thing is not, how tall the absolute value of the volume is. What we're looking out for here is an increase in volume, and you can clearly see that we saw a nice increase in volume right there. So now you might of course wonder, how could we have traded this breakout? Well, in this case, we can enter at the candle close of the actual breakout. And a common stop loss is to either place a stop loss, below the pattern, so that we allow for a retest, or even below the lowest low here of the previous symmetrical triangle. And using a risk to reward ratio of 2, you can see that our trade would have looked something like this, and we would have locked in some nice profit. But alright, so now then, the next setup I want to take a look at was actually looking very similar. You can see that we had this nice impulsive move right here, and then the price started to trade in almost like an ascending triangle, right? So an ascending triangle is when we have a pretty sort of flat upper line, while we at the same time are printing higher lows. So we pretty much had an ascending triangle right here. You can see we had consecutive higher lows, right? And our highs were at the around same level. But now, this breakout was not as good, at least in my opinion. And the first reason is that if we follow this candle, you can first of all take a look at the volume. You can see that the volume was not really more, it was about the same level as the previous candles. So that is one sort of first warning sign that this breakout might not be as strong. You can also, for example, see that this volume right here was actually much less compared to this candle right here, just a few candles prior. So that is a first sort of slight warning sign. Another warning sign right here, remember what we're looking out for here preferably is that this candle needs to be at least twice the size, but preferably maybe 3 times the size of the previous candles. And you can see that yes, this candle is definitely more than twice the size compared to this little candle, but when it comes to this candle, it's not as clear. So this is, you know, a little bit more in the risk zone. So all in all, this breakout was not, you know, it was not a perfect breakout. It was not a super bad breakout either, but it was definitely a weaker setup compared to the earlier setup down here. But right, guys, so now I do want to switch the attention a little bit here and take a look at some trading psychology when it comes to breakouts. And the very first step here, the very first point, is that you don't want to chase breakouts blindly. It's very important to avoid FOMO, especially when it comes to breakouts, because, you know, breakouts are very exciting trades. When you see a very strong and violent move, your first instinct is often to, you know, rush in. But that is most often a recipe for disaster. You always want to have a plan before the breakout actually appears. So you want to wait for your specific setup criteria to be met here before entering. So the second point builds on this. You need to stick to your plan. Discipline is crucial. So you want to have a defined entry, stop loss, and targets before trading and follow your trading rules. And also, you need to accept that fakeouts will happen. No strategy is 100%, so you need to use proper risk management and risk control. And now, if you want to really improve as a trader, you need to learn more about risk management. And luckily, I do have a video about that, and I will make sure to link the video up in the video card as well as the description below. I can also make sure, if you want to learn more about trading psychology, which is yet another key factor when it comes to trading success. You know, if you can have a perfect breakout, but if your psychology makes you not follow your plan, your strategy, it doesn't matter how good your strategy is, you will fail. But for trading psychology, I actually also have a full video on that. So I'll make sure to link the video up in the video card and the description. But right, so now I do have some more things I want to cover. I have some specific risk management tips and some more key tips for breakout trading. But I'm seeing that this video is getting long right here, so I do think I will wrap this video up. But as usual, I will make sure to publish this whole presentation for our YouTube channel members. If you didn't know, we have an amazing community right here on YouTube, and on it I share things like exclusive videos. I share things like this presentation and presentations for many other videos. So these are things that, you know, are important, but maybe not as interesting for the general YouTube audience. So it's usually, you know, things where we dive a little bit deeper than we usually do on YouTube. But yeah, if you want to get access to more content and at the same time support the channel, please consider becoming a channel member by clicking join down below. And now guys, in order to master breakout trading, I highly recommend to learn more about chart patterns. So if you have the time, make sure to check out this course next. I hope I will see you all over there soon.